Life Matters, a Penn Mutual podcast for financial professionals, bringing you life insurance insights from advanced sales experts and life insurance specialists. Grow a stronger practice today.
Welcome to Life Matters, a Penn Mutual podcast. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. So today we have, I wouldn't call it a special episode, but one that's really important to us at Penn Mutual. One of the things that has really helped drive our success over the last 5 to 6 years has been a program that's called ACE, Accelerated Customer Experience, aka ACE, which is our electronic submission and automated underwriting program that a lot of financial professionals are utilizing when they are submitting business to Penn Mutual. Now, a personal story, I've talked about this a little bit in the past, but earlier this year, I decided that I was going to buy some additional life insurance coverage, not only for protection for my spouse, but also because I was going to use it for supplemental retirement income. I've been talking for decades about using life insurance in kind of these LIRP structures, and I finally decided to put my money where my mouth is. So I called up my financial professional. I said, I want to buy some Penn Mutual variable. He did everything on his end. He sent over the link to me. I did everything on my end. And literally about an hour after I had finished entering my information, I got a call from him saying, hey, we've already gotten the approval on your case. And it was a great experience. And in fact, if it wasn't variable and had some broker-dealer requirements, we could have gotten the case paid and issued in the same day, which is just incredible. So we're really excited about ACE. We're really excited about the future of ACE. So I invited on two financial professionals to talk a little bit about not only their practice, but also about ACE itself. So we invited first Glen Wright. Glen is a financial professional in North Carolina with Worth Advisors. He's what's called a centurion with Penn Mutual. I didn't know what that term meant until just a few months ago, but he's going to explain what that means. Glen's been using ACE for a number of years and does so quite frequently. And then we've invited on my good friend, Matt Fones. I've known Matt for literally about 2 decades now. Matt is a financial professional in Nashville. He's with Gallagher, and he's somebody that works with a lot of ultra affluent families and businesses. And he's somebody that's relatively new to ACE. He hasn't used it a ton, but he's definitely using it more as part of his practice. So 2 great guys, 2 great interviews. We're going to first roll that interview I did with Glen, and then we're going to bring on my friend Matt, and then I'll be back on to wrap it up after we finish up with Matt. Glen, thank you so much for joining us here today on this episode of Life Matters, a Penn Mutual podcast.
My pleasure. My pleasure. Happy to be here with you.
Terrific. So for our listeners that are unfamiliar with you and your firm, can you give us a little background in regards to who you are and how you got into financial services? And we'll get into your kind of niche market here in just a minute, but just to lay some foundation right up front.
Again, just happy to be on here with you today. Worth Advisors, I started the company over 20 years ago. I got into the industry really to find a way to help my mother. So my mother, we grew up in Detroit. I grew up in Detroit. I was the only child. Parents got divorced. It was just her and I. She couldn't keep the home. We ended up losing it. I moved around with different family members, ultimately ended up in Memphis. And my mom got better. And after that, she started working again. But I just saw that, I'm 10, 11 years old. There's not much I can do. And I just saw her just not know how to make strong financial decisions and just what to do. So I just started reading everything I could get my hands on to try to help her. I felt helpless at that time and started working since I was 15. And I started working at the banks when I was 18. That's how I got into this industry. And I found out that there were people who were just like my mom, who needed help financially to make the right decisions. And that was the catalyst. I knew this was what I was supposed to do. And that was really the catalyst to get me into the industry.
Very cool. That's a great story. I think a lot of us probably saw our parents have financial difficulties. And I know I did as well. And it inspired us to get into financial services. I think it's a pretty common story in our industry. But your firm has a really neat niche market in regards to the clients that you primarily work with. Who is it that you work with, and what is the type of planning that you do for those individuals?
Yeah, so we're a registered investment advisory firm. We focus on really financial planning, and because of that, we do a lot of insurance work and everything else. We work with business owners. That's how we started. I'm a co-owner of a CPA firm as well, and focusing on tax planning, etc. And we start working with coaches, probably Division I college coaches, about 12, maybe 15, maybe 12, 13 years ago. And one grew into 10 to 20 to over 100 and beyond. So that's a niche that we certainly take a lot of pride in. We work with athletes as well. We work with, and then, I would say roughly 10% of our clients are kind of just all over the board, executives and so forth.
So you work with a lot of athletes and coaches, but you're not a sports fan. Do I have that right?
Yeah. So anyone who knows me knows that I'm a nerd, and I didn't, grow up watching a lot of games or anything like that. I just like to read books and primarily finance and Think and Grow Rich and, all of these types of books. So I've never been a sports fan. So I will say I am now. I follow my clients, and but outside of that, no. I'd rather go in the corner and read a book, and see how I can help more people.
So when you're working with coaches, what are some of the unique needs that they have? Because one of the sayings in regards to coaches is that people get hired to get fired. So how do you plan for those people that know that they're probably not going to be in the same place for a long period of time?
So you have to plan accordingly. Rule of thumb I grew up in Detroit. I was born there. People would work for General Motors, Ford, and Chrysler for 30 years and retire through the union and get a pension. That doesn't happen with coaching. If you're there 3 years, you're doing well. If you're beyond that, Coach K, for instance, that's an anomaly, an outlier. So you have to plan accordingly. You need to save more. You have to watch. Someone else may move into a new community and be able to buy the home that they want because they realize they're going to be there for, several years. A coach, you have to think differently. You have to budget differently. There are a lot of tax advantages or potential disadvantages if you don't understand how to master your contract. So those are just a few of the things to do. Relocation services, we help in every step of the way. So all they have to do is focus on what they do every day and be great at that. Awesome.
Well, it's a fascinating market to me because you're right. Especially these days, a lot of college coaches, they're there for 3 years and then they're on to the next job. And sometimes they'll be head coaches. Sometimes they'll be assistant coaches. And so it's a unique market, but it really fascinates me because the needs are so unique. Now, you and I were together at an event earlier this year where Penn Mutual honored you as what was called a centurion. Now, I'd never heard this because I'm relatively new to Penn Mutual. I just started about a year ago, and I'm like, what's centurion? That sounds so cool. So what does it mean to be a centurion with Penn Mutual, and how do you qualify to be a centurion?
So you have to sell over 100 policies a year to be considered a centurion. I've done that since I've been with Penn Mutual, and it takes a lot of work and diligence to do it in great systems. And I know we're gonna hopefully get a chance to talk about ACE and how that's been helpful. But no, it's a great accomplishment. They always, it's great not just because of the number, but it's the number of lives that we're affecting. we're putting, hundreds of millions or billions of dollars, in these insurance policies to help clients, ultimately, to help them to achieve their goals, financially as an asset class. Also, if they pass away, then now it's a legacy. And for someone who has delivered a death benefit to someone, and the relief that brings, the comfort that brings, even though the other person may be gone, but that sense of security, growing up with someone who didn't have any financial security growing up and grew up in a very vulnerable position, I appreciate it in a different way, and I want to help as many people as I can. So one or two policies here or there, I'm not doing my job. I'm not helping enough people.
Yeah, whenever I talk to financial professionals, I think that that's a pretty common story, that their career really starts when they deliver their first death claim. Do you remember what that experience was like and who it was that you gave the check to? And
yeah, absolutely. Absolutely, I remember. And she was the wife of someone who handled all their finances. I would rarely meet with both of them, so she didn't know everything that he had put in place. And I remember she said she wanted to go to Israel. So we had the whole plan. She came in. She said, Glenn, I want to go to Israel, but I don't feel like I can afford it. I'm going to have to go back to work. I'm not sure what I'm going to do. And when I presented the full plan and picture with the insurance proceeds to her, man, the sigh of relief. And she knew that she was going to be okay. She knew that somebody loved her and had thought enough to take care of her. So it was amazing to me, and to be able to be a part of that process. It changed my my thought process about insurance completely. I believed in it from an asset class, but not really focusing on the death benefit until you go through an experience like that. It's just been phenomenal. So now, as I look at it, we focus on, of course, we want to save enough money and use that and have the death benefit for the family, at least at a minimum level. But now it goes beyond that to make sure that everything that they want, everything that they need or could desire could be taken care of. So, it's changed me. I'll stop there or I'll keep going.
That's a great story.
Yeah.
All right. Well, so you teased it a little bit. We definitely wanted to talk to you about ACE. In fact, the focus of this particular episode is on ACE because, as one of my good friends called it in a video series that we're doing, we think of it as kind of our rocket sauce, kind of what really takes Penn Mutual to the next level. What does ACE mean for a firm like yours that does over 100 policies? I mean, 100 policies is a lot to write with one carrier on an annual basis. Do you think it would even be possible without ACE to do that?
Oh, no. So let me answer the question. Yes, it would be. It'd be a lot more challenging. For me, I'm able to have one person to focus on these policies now in my office versus two or three before. The systematic approach to ACE. You know where everything is, the entire flow. It's amazing. So I don't know how deep we want to go into it, but it certainly allows for producers to get things done, and not just efficiently, but typically quickly as well. Once you educate yourself on not just your side, but the client side as well on what they're going to experience, and you can communicate that to them so they understand it, it's beautiful.
Yeah, it's a great system. Our listeners know that I bought a policy earlier this year, and my financial professional utilized ACE, and it was basically the approval was done within the same day. Obviously, working with who you work with, there's going to be some cases where the death benefit's going to exceed the $10 million kind of on the pass-through underwriting with ACE. Do you still use ACE as a kind of the submission system on those cases?
Yes and no. Yes and no. It just depends on the case itself. And typically, some of our larger cases may have some other circumstances to go with it, trust and these things. And I like to, I'm a little old school when it comes to that and how I put together letters. And so everyone knows, underwriter knows everything that's going on as we try to coordinate those cases. So we typically don't do some of the larger ones with ACE yet, but anyone that we can, we will.
Have you been using ACE for like your informals where you're not ready to quite go to a formal, but you're using ACE from an informal perspective?
Yes. Yes.
Does that make a difference for you in your firm where you can kind of get a quick peek in regards to what the potential underwriting is?
Absolutely. That's, we write with, several carriers. Penn Mutual's certainly a favorite for many different reasons. And it's good to know what's going to be best for the client and as fast as possible. And so that certainly helps. That's helped me in the past. I am here. I have an organization, a team of people who help me to be here. And if I had one of my admins to join this podcast, they would probably be coming on with pom-poms over ACE because they remember what life was before ACE and then working with Penn and ACE now. So they're happy.
So we want to be fair and balanced here. I mean, obviously ACE is a great system, but we know it's not perfect. We always want to be improving. From your perspective, if you could unilaterally change something about ACE, what would it be? Would it be that we could do survivorship? Do you have anything specific that you would like to provide as far as feedback goes for the people that run that system?
Honestly, I don't have any issues. That could have been a question I could have asked one of my assistants on their thoughts. But for me, I really don't have any. I think just when it comes to, I would love it for everything. So we could do even the specialized larger cases with ACE. That'd be amazing. Not necessarily the same underwriting approvals. I mean, that would be great too. But just the process and the system itself, that would be the one thing that that would be great for us.
All right, terrific. Now, you said that you like working with Penn Mutual and that ACE isn't the only reason. What are some of the other things that attract you to Penn Mutual as a carrier?
I would the strength of the company, the leadership, the decision makers, and some of the great decisions that have been made financially by Penn. The people, the service. That's certainly important. My regional's phenomenal, and so when I'm calling or my assistants call calling Penn for anything, then it feels like they've got somebody on the other end that actually cares about what they do, and that means because we care, and so that makes a huge difference. It just makes life work better. Even though I may have received some awards, even before that, I never felt like a number with Penn. Those things matter. And I feel like based on the financial decisions, based on the projections, I listen and pay attention and read all of those things, that even from the top all the way down, there's a level of caring to all the way down to the policyholder. And so, when we put these together, these illustrations, we're talking 20, 30, 40, 50 years or more. Looking at the track record of Penn, leadership of Penn, and then it helps us to determine where we're going. And so finance is a part of it, but also leadership is going to be a part of it as well. Yeah,
that O'Malley guy, he's all right.
Yeah, absolutely.
All right, so we like to end up our podcast interviews with a little bit of fun. You and I were talking earlier this week, and we discovered that we both had something in common that we hadn't talked about previously, and that's bowling. So, So back when I was a kind of late teen, or even into my early 20s, my family and we were in a Sunday night bowling league. It was myself and my brother, who also now works for Penn Mutual, and my mom, and we would bowl every Sunday night, and we did it for years. And I got to be pretty good, but it sounds like you were even better than I was.
I probably was. Yeah. I was actually pretty good.
Yeah.
So I'm a modest guy, but when it comes to bowling, the modesty goes out the window.
Yeah. So I got up to about a 190 average. What was your average at the end of the day?
Yeah, 229 was my highest average. I played in college. I took it in college. I didn't play for the university, but I took a class. I played in the league. And when I was consistent and played all the time, I was actually pretty good. So I think I was in the high 270s for my highest score. I never scored 300, so I can't say I've done that yet. But I just really enjoyed the game.
So many of the financial professionals that are listening here, they play golf all the time. I hate golf. Why don't we say that we just start to move financial professionals into bowling so we can?
Exactly. We need to have the real decisions to be made in the bowling alley. Forget the golf course.
All right, you and I are gonna bring that up at the next meeting of financial professionals.
It takes too long. 4.5 hours. Who's got time to do all that? You can play a quick game, or you play a couple games in an hour. You're in and out. It's great.
All right, well, let's wrap it up, Glenn. Thanks so much for joining us here today. Great interview. So many great insights. I'd like to have you on the podcast again, maybe sometime next year, if you don't mind, because I really want to dive deeper into those college coaches, but really appreciate you being here today.
Okay. No, we can talk about advanced planning and all those cool things. It'd be my pleasure. Thank you for having me. It's been a blast.
All right. It is my honor to introduce my good friend, Matt Fones. Matt, thank you so much for joining us here today on Life Matters, a Penn Mutual podcast.
Well, Bill, you, again, longtime friend for years and years. And, these years are going by too fast, Bill, but it's a pleasure to always visit with Bill Bell, and one of the very all-time greats, if you will, in the industry, in my opinion.
Oh, that's so nice of you to say. Well, so Matt, you and we're both attorneys. How'd you find yourself in financial services? Can you give us a little backstory there?
Well, yeah, just I'll try to keep it real short here, but the long story short is I had every intentions of practicing law. I was going to go in and clerk for a relative of mine, was actually Judge Fones was the Chief Justice of the Supreme Court of Tennessee. And I'd always planned on starting with him and then going in with a pretty high profile law firm in Nashville. Judge Fones called and said it was basically time for him to retire. A family friend had a great tax attorney in Nashville, and they set up a meeting with him, and he said, you know what, I've got a great idea for you. You could go in and you basically be half an attorney, half in the insurance business to work with wealthy families in handling the life insurance in the estate planning process. And that appealed to me. He set up a couple of interviews, and boom, there was the fork in the road where I made a different decision. And for the first couple of years, Bill, I think I always kind of wondered, what in the world did I do? But now I look back and I figure I'm just incredibly blessed that all things worked out the way they did. And I've been very blessed with the career I've had, and no regrets.
So the legal profession's loss is the financial services profession's gain, is really what it comes down to.
Well, the legal profession might say, "Oh, it worked out really well," but anyway, I'm happy, and I've got so many great friends that I have developed in the legal profession with working with a lot of tax attorneys. And so, and of course, as you know, with what we do and the type of cases that I work on, that legal background has proven to be incredibly valuable. So I'm not doing what you do all day long or some of the estate planning attorneys all day long, but I'm close enough to it that I feel like I'm certainly put that law degree and I got out, I passed the bar, ready to get going. I was ready to practice law. And so took a turn, but I feel like I've still used that.
We're going to get back to service in just a second here, because that's one of the reasons why we brought you on to talk about today. But I did want to ask you one other thing about kind of planning in general. One of the things that we're definitely promoting quite a bit right now at Penn Mutual, and I think the insurance industry as a whole in general is doing so, is the sunset of the Tax Cuts and Jobs Act's tax provisions here at the end of next year. And with the families that you're working with, are the numbers just too large that they don't really care, or they've already utilized their exemption, or is that something that's still motivating behavior right now to take advantage of that increased transfer tax exemption?
Right. I think the majority of mine have took advantage of that as soon as they could. The tax lawyers that I'm working with most of them are really seasoned. I mean, they were jumping all over that because, as you know, time value of money, the faster you could take advantage of something like that. So most of them, I believe, have done it, but I am sure that there are some who will be looking at it. And, what I think is going to happen in my little world, Bill, is, I've got about, several key tax attorneys that I work with, have a great relationship with. But what I think is going to happen to them as this date gets closer is they are going to become absolutely slammed, just slammed. And I think, that means they're going to be more of making sure people have taken advantage of that. And maybe that will create opportunities for me. But at the same time, I'm probably what I would imagine happens is they're just going as fast as they can to take care of their clients. And they're going to have families wrapped around their building trying to get to them all. And it might turn out to be that it's just a lull from the standpoint of them going out proactively looking for new projects. I think they're going to be really locked into just taking care of what they have to take care of before that deadline happens.
All right. So that is just a reminder to our financial professionals that are listening. So if you are a financial professional that has a client that is in the position of being able to take advantage of this increased transfer tax exemption, they need to start doing so now, because as Matt rightfully said, those good estate planning attorneys that have the ability to put trust documents and so forth in place, they're just going to be absolutely slammed in 2025. And at some point, they're just going to stop taking new clients. So we need to start planning now. All right. So let's switch gears a little bit here. Tell me a couple things that you like about Penn Mutual. And you can't just say, I like the fact that Bill Bell is there. If you want to say,
well, that is the number one reason is Bill Bell. But aside from that, I listen, I'm, all these carriers, we try to have partnerships. That's the way I was always thought. The carriers are incredibly valuable to the producers and vice versa. We need each other. And so with that note, but I'm going to make some generalizations. I'm lived with where some carriers have come in and raised the COIs, and most of those have been stock carriers, to my knowledge. So when those rates were so low, I know I talked to a lot of CEOs of major carriers, and that was one of the biggest concern was low interest rate environment. And I know in Japan, it was there for a long, long time. And, if you followed what the impact over there was. But so I would say that I have really taken even more recently when I've lived through having to go out to clients and walk them through, we're having to change your COIs and you're 92 years old. So there's nothing you can do. You can't go anywhere else. You're here. This is it. And having to see the impact that has, that just, I don't want to go through that. And so going with the carriers, so what does that mean with Penn Mutual? I like the fact that it's a mutual company, because I think I have found that it's, at least, I'm not saying a mutual company is immune to changing their COIs. But from my, again, small view, I've seen, it seems to me that the more of the COI increases have happened with stock carriers than it has with mutuals. And so Penn Mutual is in that sweet spot that is a very highly rated carrier, mutual company, and that is really important to me, especially in this environment, Bill.
So I think that there's a lot of synchronicity between the type of planning that you do and Penn Mutual as a carrier, because when you're working with the families that you work with, you're taking really a long-term approach to their planning. We absolutely take a long-term approach to how we structure our life insurance. And I think that you're exactly right. Kind of the mutual story and taking that long-term approach is so important, especially in the markets that you're in.
Yeah. Oh, yeah. I mean, to me, Bill, and just like my mentor, I would say that we probably analyze things more than we need to. Look, if we were just trying to sell as much as we could, we would go around and go much faster. Here's this, move on. I spend a lot of time. I always try to do, what would I do if it were me? If I were in their shoes, what would I do? And so, and I care a lot. I'm one of those guys, I wouldn't be able to sleep at night. And I've been very blessed. I sold my practice in 2015. And so I've been very blessed from that perspective, but I still love what I do. One thing that I missed, Bill, was that I kind of thought, well, when I sell, now I'm going to have enough, I've got enough money, I could live the rest of my life. So that means I won't worry about anything. Well, I missed that one, because I worry just as much now as I did before I sold. And a lot of it is just to make sure that the clients that we do the right thing for the clients and things work out. And like, for example, those COI increases, they worry the heck out of me to go in there and deal with that. So doing the right thing for the client, whether it's picking the right carrier, whether it's making sure that I do the right design, get the best offer, all those things, at least to me, and I'm sure I worry too much, but those are all, that's what I put a lot of effort in, to make sure I'm trying to do the right thing for them. What would I do for myself? It's that simple.
All right. So I want to talk a little bit about ACE, because this episode really is about ACE. And I'm going to take us back a little bit, all the way to January. So I was in Nashville, and you and I had dinner at our usual spot.
That's right.
At Fleming's, in the shadow of Vanderbilt University. I literally,
that's correct.
If you threw a baseball out the window of that Fleming's, it would hit the football stadium. That's how close it is. But you and I met there with your regional guy for Penn Mutual, and we were talking a little bit about ACE. And I think shortly after that, you did your first ACE application. I don't know if the case actually placed or not. I didn't follow up with you. But when you're talking about kind of working faster and more efficiently, I think ACE is certainly a system that can help a firm like yours to create those efficiencies. What is it that you like about ACE? Is it something that you're going to continue to be using going forward? I know you talked to your office staff about this as well. So give me some thoughts about ACE here, and how you're going to be able to utilize it in your practice going forward.
Yeah, well, that's a great question. They would be better answering that question, but I'll do my best. So here's what I would say from my perspective is that, and I'll go back. I'm glad it got here, because, when COVID happened, I remember going in shortly before, I think the Nashville Estate Planning Council had me do a presentation. And this was before COVID. And I remember interviewing quite a few key underwriters of carriers and just watching the evolution of how their data is becoming more and more efficient as far as helping them make decisions, good decisions, accurate decisions from an underwriting perspective. So you could see that happening. And I don't know if my gut feeling would be is that COVID helps, it helps speed that process up. So I was thrilled to see what Penn Mutual was doing in this department. I know you're not the only carrier doing it, but I know that my team likes how your process works. And I think the high level from, again, Bill, you know this, this is not from a technology perspective, that is not my strength, but my staff is very good at it. But, I think it helps. It's everything is handled electronically. I know that. So paperless. And I think that they have found that the underwriting is expedited by doing this. So therefore it saves time. The process for my team to do this, it saves time there, which is important to me. Again, looking at how can you be more efficient? I think I'm looking at a few other things. Looking down here, a couple of notes. I thought about this question ahead of time, and they are able to also check the status. It's very efficient about checking where's the status of the process right now. So overall, I think we're all very, I think we're very happy with what you guys are doing. And yes, we have that case you talked about in multiple cases. Now I don't do, as you know, a lot of cases. So I think the way we tee it up is you got to look for the right situations. And I think you guys, again, I hope if I'm wrong, I apologize. I think you guys can go up to 10 million is what's in my head.
That's exactly right.
And so I think you can go up to 10 million, which is a great amount. So especially when we get cases, let's say because if a great tax attorney calls, you can't just say, well, I don't want to work on that case, but I want this one. So, if they call, we're doing it. So especially when we have, might be a son or a grandson or daughter, and you want to, and if they fit, and they're like, hey, we want to get 5 million of whether it be term or permanent. So I think a lot of people might have in their mind that these programs are just for term insurance, but I know with Penn Mutual, it's not just term; it's your permanent. And I love your variable policies, especially that have the no lapse guarantee on them. That's for me because I can come in and say, hey, you've got this guarantee, but we have the upside of the market. I like the funds that you have, the Vanguard options. So I love how you all have that built. So I can use this program on pivot either one. In fact, I think I did one case last year that had 10 million. We did like 5 million in permanent, 5 million in term, and it worked beautifully. Saved time. The client liked it. They liked it being electronic. Again, me at 60, I'm more of the old school, fill out a piece of paper, but trying to be more efficient. So I'm thankful that you have it, and it has worked well. And I know it doesn't fit every situation, but it certainly, my team is much better than I am at knowing when it fits and when to utilize it, and they are utilizing it.
Yeah, and I know a bunch of financial professionals like yourself that work in that high-end marketplace. If they know the case is going to go to Penn Mutual, even if the death benefit's above 10 million, they'll still use ACE to submit the case because it's all paperless, it's all electronic. Yeah, it won't go through the frictionless underwriting for the 10 million like you talked about, but it's still a more efficient way of submitting the case than doing a paper app and sending it in like we used to in the not so distant past.
That's right.
It's a very cool system. And we've also seen some financial professionals using informal ACE to kind of get an idea on the underwriting of those cases. So
right.
A lot of opportunity for utilization of ACE in that high-end marketplace. All right.
Right. So I think it's great. Now, hopefully this will only continue. I don't know how much more it'll go upstream from from a death benefit perspective. Will that eventually go all the way up? Will it be the way it is of the future? I don't know. But I know one thing right now, this minute, we certainly want to take advantage of it when we can. Again, more efficient all the way around.
Terrific. All right. So we always like to end these interviews with some fun questions. So you went to Western Kentucky University.
That is correct.
The mascot for Western Kentucky is just basically a big red blob of goo with arms, legs, and eyes. What is that thing? What is it called, and why does it exist?
Big Red. And he was actually, I was an SAE at Western Kentucky University. And that was one of our fraternity brothers actually came up with that deal.
Really? So we could blame him for seeing him every once in a while.
Maybe there was alcohol involved. I do not know. But he's a big blob. But you know what? He's kind of a funny, I don't know what you want to go, funny, cute blob. And, he's used on ESPN all the time. Because he's they don't, at least he's, but he's pretty funny little guy. And it's interesting. I just left, I grabbed breakfast. I was driving over to my office, and right in front of me was a Jeep, and there was a WKU sticker with Big Red on the back of this girl's Jeep. So
yeah, so for our listeners, if you're watching March Madness, every once in a while Western Kentucky does make the tournament, and you'll see that we now know it's called Big Red running up and down the sidelines. You can blame Matt Fones' friend, fraternity brother for his existence.
That's right. Or you can be thrilled. You might bring a smile to your face. But hold on now, Bill. Do I get a question?
Yeah, of course. You're my guest.
Okay,
you can ask as many questions as you
want.
want.
I want a question.
Yeah.
What about our STEP program? How many steps we got?
I
want people across the country to know this, is that Bill and I were in a small group of buddies who were out where we could see, like on the Fitbit, like what you're tracking steps. And I cannot tell you how much Bill would tick me off, because he's in California, West Coast time, left coast, whatever you would call, and I'm in Nashville and Central. And I'd sit there and I'd open up my iPad and we'd pull up this thing and I'd see these steps on Bill's just going up and up and up. And I had to get off the dang couch at 11 o'clock at night and go outside and start walking, So anyway, Bill helped me hopefully add a couple of years to my life, because he would keep pushing me with our steps.
Yeah. So it's early here in California when we're recording this. So I'm only at, I'm still at less than 1,000 steps, but by the end of the day, I should be somewhere between 12 and 15,000, which is kind of my average day. Who knows though? Maybe I'll take an extra walk today and try to get up to 20, just because you've inspired me today.
There we go. That's right. We need to resurrect that deal and have a threshold minimum of 15, maybe 20. Because Lord knows I need that.
Maybe we could get Big Red to join us, because he looks like
Absolutely.
he could use a couple steps.
He could probably use that a little bit too.
All right, terrific. Hey, Matt, we've gone over time, but so much great information. Thanks so much for joining here today.
Bill, as always, it's fun to always be with Bill Bell, and I really appreciate everything you do and Penn Mutual does. And whenever I have a big problem or something, I always call Bill. Bill, what do you think about this? So thank you for all the years of you being there to help me.
Hey, it's my pleasure. Thanks for joining us. I'm sure the listeners found it super intriguing, informational, and fun. So again, thanks a lot.
All right. See you soon.
Wow, those were two great interviews. I mean, I love talking to Glenn. I love talking to Matt. Two great guys. Certainly love hearing from Glenn that he's a big bowler. You just don't hear that very much in our industry. And I really think that we need to make that business done in the bowling alley a thing going forward here. Let's take some of that off the golf course and make it bowling centric. A couple of housekeeping items before we go. For our longtime listeners, you'll know that every single episode, I'm reminding people how many days we have until the expiration of the tax cuts in the Tax Cuts and Jobs Act of 2017. As of the date of publication of this particular episode, we are 461 days away from that sunset actually occurring. It sounds like a lot. It is not. In fact, we talked about it with Matt. So if you have clients that are in the position of being able to take advantage of the increased transfer tax exemption, they need to be talking to their tax advisor now and start putting plans in place. If you have a question for me or Glenn or Matt or anybody else associated with the show, please send us an email to lifematters@pennmutual.com. Again, that's lifematters@pennmutual.com. That's a special email box that only I have access to, and I do respond to every email that I get. In fact, I just got one earlier this week where somebody said, hey, I was listening to the show and I had a question for you. That's a great way to communicate. So drop us an email to lifematters@pennmutual.com. If you're listening on Apple Podcasts or Spotify and you haven't subscribed already, please subscribe to the show. That way you don't miss any future episodes. Also, if you are a subscriber on Apple Podcasts and you haven't stopped by and left us a review, please do so. It only takes a few seconds to leave us a 5-star review. Having more 5-star reviews helps boost visibility of the show and boosts our audience, so we would really be appreciative of that. And in fact, if you stop by and actually leave us a little written review, I will be your best friend. So please do so as soon as you have a free moment. So for Glen Wright, for Matt Fones, I'm Bill Bell. Thank you so much for joining us here today, and I look forward to talking to you again soon.
Thank you for watching. If you enjoyed this video, don't forget to hit that subscribe button and turn on notifications so you never miss an update.